Hello and welcome to this week's Australian Stock Market Report. Now this week we're going to look at the last financial year, what happened and how this helps us to find stocks that will perform in the next year. Then we'll get into the Australian stock market so I can share with you my thoughts on where it's heading, along with answering your questions and looking at stocks for you. Hello, I'm Dale Gillham, the Chief Analyst here at Wealth Within, and we're Australia's most trusted stock market educators. Before we move on, thank you for showing your support for our channel and hitting that subscribe button. Remember, as you subscribe, click that bell on the right of it so you keep up to date with our latest videos. Also, remember to tune into our live Australian stock market show every Tuesday, 7 to 8 p.m. Australian Eastern Time. Now, this is the show where you get to ask us, the stock market education and trading experts, to look at your favourite stocks and answer all of your questions. We've come to the end of another financial year, and it is at this time that I recommend investors take a look back at what has occurred in the markets over the last 12 months, as this will provide insight into where opportunities will be in the next 12 months. Now, by 30 June 2021, the All Ordinaries Index had closed up 10.72% for the financial year, and historically the Australian stock market achieves a yearly return of between 10 and 20%, over 40% of the time. Therefore, despite some of the volatility in the last 12 months, the Australian market actually performed pretty well. If we drill down and look at the sectors that contributed to the performance, financials rose 19.63%, while consumer discretionary, that rose 19.36%, and communication services, that rose 18.39% in the last 12 months. Now, on the flip side, utilities was the worst performing sector for the financial year, down 8.32%, while information technology, that was down 0.82%, and energy, that was down 0.1%. Now, given this, it is not surprising to see that the best performing index was the S&P ASX top 20 stocks, which rose 13.88% during the financial year. Now, moving forward, it's reasonable to assume that financials and consumer discretionary sectors, they may slow down the rest of this calendar year, while opportunities are likely to come from utilities, information technology and energy. Of these, I like the energy sector best, although I believe opportunities will also come from the industrial sector. Now, looking at the stock level, the A2 milk company is down 46% this financial year, although it is showing good signs of having turned the corner, while AGL Energy and Beach Energy were both down over 30% for the financial year. While I believe it's a bit too early for both of these companies, I would certainly put them on my watch list. Okay, what were the best and worst performing sectors last week? Well, the best performing sectors included communication services, and that was up 3.24% last week, followed by consumer discretionary, and that was up 1.04%, and consumer staples, that was up 0.85% last week. The worst performing sectors included utilities, and that was down 3.88%, followed by information technology, that was down 3.07%, and healthcare, that was down 0.22% last week. The best performers in the ASX S&P Top 100 stocks include IDP Education, who opened last Friday over 16% up after it announced it entered into an agreement to buy 100% of the British Council's Indian International Language Testing System operations. IDP Education closed the week up 17.81%. Mineral Resources was up 9.48%, followed by Harvey Norman, and that was up 8.33% last week. The worst performing stocks last week included AGL Energy, that was down 9.97%, followed by Afterpay, down 8.33%, and Lendlease, that was down 7.05%. So what do I expect in the market moving forward? Well, let's get to the charts for our S&P 500 All Ordinaries Index update for this week. We'll also answer your questions and look at the stocks that you've chosen for me.
A quick reminder before the video starts. This report is an educational tool, and as such, your personal circumstances have not been considered. We hope you enjoy this week's report.
Well, what an interesting week we had last week on the Australian stock market. And I know I've said it before that we need to expect anything to happen. And pretty much last week, anything did happen. I mean, not that it was a super bullish week, nor was it super bearish. And our market seems to sort of jump up a little bit and then do nothing for a few weeks. But let's go and have a look at the chart to see what's actually going on with the market at this point in time. And on the screen, we've got our monthly chart on the left of the screen, and on the right of the screen, we've got the weekly chart. Sorry, it's the opposite way at the moment. I've just flipped them. There's my monthly chart there. So having a look at the monthly chart, which is the one I wanted to go to first, and you can see here the momentum since the GFC, our market kept coming back to this sort of dashed line, and right now we're just flying very, very much away from it. Eventually it will come back to this sort of momentum that it normally does, and that's what markets do. They move away from the momentum, gather a lot more speed, and then they overheat a bit, and then they come back to its normal momentum. It's sort of like an elastic band or one of those paddles with the ball on it with the elastic that you used to play with when you were a kid, or I think some kids might remember that. You bang the ball and it goes away, and then it always comes back to the paddle. And this is where this dashed line, if you think about that as the paddle, it's going right away from it. It will come back to it, but right now it's just not wanting to fall away. If we look over here, we can see here June was a really, really good month there. 289 point range, opening at 7406 and closing at 7585 points with a high of 7655. So we did get up to the 7600 points that I was expecting way back here. I thought, well, the market could reach up to 7,600 points, but we really haven't had a pullback. And this is the thing that keeps worrying me, and I know it's all on the media, everybody's expecting crashes, etc. And I'm not worried about a market crash. I just think our market needs to fall away a little bit just to get a bit more stability in the market. Right now it is moving up, and we need to assume it will continue to move up until it doesn't anymore. And I know that sounds a little bit of a strange comment, but when you see a market moving like this, and I'm saying, hey, I think the market's got to come down, that is not a signal to ever sell. No expert telling you that the market's overheated and it's going to crash should ever be a signal to sell. Basically, the premise is, to keep it really, really simple, is always hold your stocks while they're rising, and if they start to fall, then you get out of them, but don't get out of them before they fall away. People that jump out too early or jump out before the fall invariably jump out way too early and miss some of the rises, and the thing is when you're holding stocks that are rising in value, then there's no risk for you. Why do you need to panic and get out of it? And I've seen too many people lately saying, the experts in the US are saying the market's crashing, I've just sold all my portfolio. That's not a smart thing to do. Now, I want to go down onto the weekly chart, but this move here on this monthly chart, it is moving up very, very, very strongly. We had 2 strong months. So will the market go sideways again like it did through here? We had 2 strong months sideways, 2 months sideways, 2 strong months, or 2.5, 3 months moving up. Will it go sideways again, or are we going to tip over? Now, as I showed you, I think it was a week or so ago, the momentum is changing on our market. So if I use my little trend line tool, we can see the momentum there. If I go and then use this same tool, from this point in time here, September last year, our momentum sort of really been around that sort of level. You can see the difference in the angle between the two. So it has been a little bit more sustainable, but we haven't really had the big move down. Now, looking at last week, we can see here how 2 weeks ago we had the market opening on its high, push right down, big range, 156 point range, closing about a third of the way from the top, but it's still a down week. Last week shows a lot of indecision, and this is it's an interesting one here. We started at 7578 points, which is this little tick here on the left. So that's where we started. Then the market moved up and down, and eventually it closed for the week. So it closed at 7587.1 points with a range of 127 points for the week. And it closed just a little bit above where it opened. So that's that tick on the right there. So it closed at 7587, which is only about 9 points higher than it closed. Now, this is a sign of indecision, this bar. So it would not surprise me if the market was down this week and we started moving down this week. Interesting thing with this bar here is it actually had a higher than the previous week. You can see there 7634, and this one there was 7624. So we traded 10 points higher, but this showing indecision, and it wouldn't surprise me, as I said, if we do get a down week this week. But then the way the market is, it wouldn't surprise me if we got another up week and we beat the high of that one, 7634. And if we do that, we'll probably go through that 7655 points and make a new all-time high. But geez, I mean, the pessimist image suggests we still do need to come down a little bit more. I mean, even that momentum that we've had since then, in theory, we should come down to bump our head on that or even go a bit lower. But at this point in time, it just is about being careful on our marketplace and not jumping into too many stocks and thinking that it's going to be brilliant at this point in time. Volume's pretty steady on the marketplace at this point in time. We have 1, 2, 3, 4 weeks up, 1 week down. So not bad. That actually looks quite bullish, but that bar is a little bit more of indecision there for me. So at the moment, with the market, you just need, I'd look at good quality stocks. That's really what I'm suggesting. If you're holding stocks, make sure you have stop losses underneath them. Just don't sell because, as I said just a little bit earlier, don't sell because any expert says to you the market's going to come down. That's just not smart. It's all we do as experts is give us our expert opinion based on what normally happens and based on our research. Now, normally our market would have gone down into a low by now. It normally would have done that. We should have normally had our yearly low, but it's not happening. And it's like a seesaw. The more you walk up a seesaw, the closer you get to the apex and then the tip down. Now, all we're finding at the moment is the walk up the seesaw to that apex is just getting longer and longer and longer. And eventually, it'll tip and it'll come down again. Am I expecting a crash? Definitely not. Our market will not crash. I'm really, really confident of that. We'll just get a normal pullback, 8 to 12%, roughly in that sort of bracket. But if it's going to happen this week, next month, I'm not sure at the moment because the market still is going up. And obviously with stimulus packages, etc., around the world with COVID, all this uncertainty, people at home trading, there's more money coming into the market. It's a little bit different times. And that's why it's a little bit changing. This is where traders struggle because markets do change momentum, they change volatility, emotions change, and people who trade have very set trading plans, like 1 + 1 = 2. They struggle in times like these, whereas the very best traders use everything they know all of the time and are recognizing when the market's changing personality. Now, whilst we understand the market's changing personality, the overall market is a little bit hard to predict, but stocks aren't. The stocks that we're looking at the moment, there's some great stocks that we're buying, there's some great stocks that we're looking to sell at this point in time, but you're seeing earlier, the top 20 stocks were moving the market last financial year. So I expect some of that to come off a little bit, and there'll be a signal when you've got financials and materials going down. If they start to go down, they will take the All Ordinaries Index with it. So just make sure you've got stops or exit strategies on any stocks. Hold them while they're going up, get out while they're going down. That's it for my take on the market. Now it's time to get into your questions. Okay, the first question we have today is from Maximilian, who says, can you guys please cover FLN, which is a stock called Freelancer? They have been on a tear lately, just turning cash flow positive and seem very scalable. Also, they have diversified their business into Freelancer, always one business, Marketplace, and Escrow, which is a secure online payments, and 3 Freightlancer, online freight services. He says, Escrow seems like it could be the new PayPal. So let's go and have a look at the stock based on, if you look on the screen, you can see there on the monthly chart on the left and weekly chart on the right, and you can see it's really taken off, as you see. It was on a tear recently. So looking at the monthly chart, if I just put my little tool on it, so since there, that February low, 181%, currently up 138%. So the question is really about where it can go to from here. And you can see if we look at that monthly chart, if we go right back, its all-time high was way back there in November 2013 at $2.60. It's come right back down into a low in March last year, which is down at 23 cents. So it is quite volatile and spent a hell of a lot of time. It is looking a hell of a lot better, but is this a move now? Is this sustainable? I don't think it's going to be too sustainable. I don't think you're going to see too much through here. In terms of, it's probably going to find some resistance around that sort of where it is, that sort of that $1.30 mark through here. If I go and click on here and look around that $1.30 mark, about there, that's a pretty heavy resistance level for this stock. And so I would suggest it's probably going to find some struggle to get through this, and probably it may even start to come back a bit. If I click my little crosshairs off, it may come back down to sort of down that 90-cent range at this point in time. I understand what you're talking about. Like, I don't know how many stocks they're talking about being the next buy now, pay later stock, and we've seen a few of them come out. There's more and more competition in the buy now, pay later space, so that doesn't necessarily excite me, but then there's more regulation going to be coming into the buy now, pay later space. The federal government is very much looking at it, same with ASIC, and the more regulation, the more competition that's coming into that sector, the more chance is the stocks that are entering into that area won't do as well. And we're also seeing that the credit card companies are losing out on business. So, you might find them coming into it. The banks might come into that as well. I'm just saying I'm not saying I know that they're coming into it, but I would speculate there's going to be more competition coming in because the big end of town don't like losing business. So, and we've seen Afterpay, like last week, was down, I think, 8 or 9% after being strong the week before. So it's getting a little bit more volatile than normal at this point in time. But really, I don't mind the stock. Would I be buying it right now? Probably not. I wouldn't be buying that stock right now. What I'd be doing is if I did own it, I'd still be holding it because there's no reason to get out of it. I would just have a stop loss underneath my price at the moment and work out what's a good exit strategy if it should fall away. If it keeps going up, keep staying with that. But would I take a new position in it right now? No, I'd rather see it come down. And I was only saying to a new trader the other day, and it's like, oh, how do you walk upstairs? She goes, what do you mean? And I went, well, basically when you walk upstairs, which is what a stock does, it goes up, comes down, goes up, comes down, goes up and comes down. It's creating platforms. And when you walk up a stairs, you pick your leg up and then you put it on the next step to get leverage to move to the next level. And then you put your foot down again to get to the next level. That's what we need to see. So if I had the stock and I found it came down a bit to create a new floor, from which I then would spring by the next part of the bullish run, then I'd be looking at purchasing somewhere around there. But right now, I wouldn't be getting into this stock for those very reasons, pretty much. Now, next we have a question from Alex, who's a new subscriber and loving information content. I've been watching Can Group ASX with the developing industry here in Australia. Is this a good potential growth stock? So let's go and have a look at Can Group now. I'll just bring that up for you so you can see that. So let me click on Can Group. Interesting stock. It just looks like it's very, very bearish, isn't it? I've never seen this stock before. I mean, it had an all-time high back there in January 2018 at $4.55, and it really is flown down right down to October 2020, down at 29 cents. What do I say about this? It is a very bearish stock. It still looks like you might find this one just travels along sideways along the bottom for a little while. So you look at all the indecision in these bars through here. And yes, we've had a month up so far. Only a few days. Obviously, it opened at 35 cents, had a high of 42. So you can see big movements in price. If we put our little tool on here between this month, from the end of last month, it's up 23%. So I understand why people see this. They probably, and I'm not saying, I don't know how you're picking your groups or how you've been alerted to this, where you've been doing research on, or what have you been doing, or whether you just picked it up as a hot tip in a chat forum. But right now, I would rather give away money on this than 20, 30, 50, 100% on the bottom to know this stock is going up before getting into it. And I find people say, oh, it's gone up 23% in the last few days, I'll get into it. And this is where FOMO really comes into it. And we can see here, now we're on a weekly chart, and you can see here's last week's bar, and I'll go and put my little tool on it. From the close the week before, we're talking about 13.2% it rose. Now, it started out going down. Right now, it really hasn't shown me that it's going to be going up. So it is too early. Keep it on your watch list. I'm not saying it's not going to go up. I'm not saying it's not going to be a good stock to own. Is it going to be a good long-term growth stock? Remains to be seen. It really is. At the moment, it's more of a trading stock. It's not a good long-term buy to hold stock. It's too early to get in right now, because at the moment it hasn't told me it stopped falling away, because we might see just a bit of a move up like this, and then for it to fall away and get a lower low than that. That's quite highly possible. That's 29 cents, because you can see here it moved up, here it moved up, even there it moved up quite a lot. But if I go back to here, from the close that week to there's 13, 16%, 17, 18%, and anybody buying it around there probably still hold it and traded it all the way down to 30 cents, which is a third of the price it was there. So you don't want to jump in too early. I'd rather see it find its feet first, get some support, tell me it's going to start moving up before I start to get into a stock like this, but way too early. And really, you do need to do your research on this stock, because at the moment, it's not telling me it's a good long-term growth stock. So please please just sit back and wait and be patient. The best traders I know are the most patient ones, not the ones that jump in because it's moved up 10, 20, 30% in the last couple of weeks. So just be patient. Get some good solid rules around buying and selling and managing the stock. Now we have a question from somebody called Mahato. Please give your views on suppose if the asking me a question. Suppose if X stock is closed at $20.10 today, and I put a stop loss at $20.05. So it's closed at $20.10. You're wanting to have a stop loss at $20.05. Way too tight, mate. I know it's a hypothetical situation, but a stop loss at 5 cents on a $20 stock is way too tight. And the very next day, the stock opened at $19.80 and it went further down. So in this case, will my stock be sold or not? Well, that depends on, the answer to that is depending on the the sell order you have. So if you put an exit order into the system at 5 cents below the current price, and you don't have a limit on that, so that's the point there, the limit order. So if you just have an order to sell on the next day, now outside of market hours, you have to put a limit order on. So if you're putting that exit stop loss on at $10.05 and you're putting that on at 7 p.m. at night or 8 a.m. in the morning, you have to put in a limit that you're prepared to sell at. So if it does gap down, so you might put a limit at $20 as your limit. So if it gapped down to $19.80, it would not sell because it gapped right through your limit because you've told the broker you won't sell anything below $20. So that's the first thing. If you put a stop loss on at $20.05, and it just trades through that. So let's say it opens at $20.06 in the morning and trades through that, then you will be sold from that point of view because you've put your exit at $20.05. But having a stop loss at $20.05 on a $20.10 stock is way too tight. You just don't do that. Because a $20 stock will fluctuate 5 cents all the time, and it may open up, 1 or 2% down and then trade up for the rest of the day. You don't know. And I had a case of that on a stock that I owned just recently where it came really close to my exit strategy, very close, and then just turned around. And a lot of people won't let stocks have that fluctuation where, like I was saying earlier, you need to put your foot down for it to rise up again. Why do you want to keep buying and selling stocks all the time? And brokers love turnover. They love people buying and selling all of the time because that's how they get paid. The more high frequency you trade, the more money they make. So they'll make it all these things for you to put stop losses in and all sorts of systems in to get you to buy and sell more. Whereas buying and selling less makes you far more money. And I know that sounds really silly, but the further away you move from the market, the less you buy and sell, the more money you actually make because part of it is you're not paying brokers a lot of money. And so just setting a better stop loss on your stock will actually give you better results. But in this case, as I said, if it does gap through your stop loss, depending on the limit you set, yes, it won't sell it. But you need to be careful about what limits then you set if you're placing orders outside the market. And to be brutally honest, I never put stop losses into a broking platform. And some of you are probably saying, why don't you do that, Dale? You talk about stop losses all the time. I do. I have my stop losses written down. I just don't tell my broker what they are because if you've got a lot of people set stop losses around round numbers, like $10, $20, $30, and they'll set them around there. And if a broker's got a lot of trades, they're sitting there, stop losses sitting there at $19.99 on a $20 stock, they might go and sell that stock to trigger all those stop losses. Doesn't happen? Yeah, it does. So that's why I suggest you make sure, and if you keep putting your stop losses into the broking platform, you're telling the whole wide world basically, or the broking world, where you want to exit that stock. And so they can use their stocks that they have in their house accounts to short sell stocks if they choose to push the price down to trigger a lot more orders because that's how they make their money. Is it perfectly legal? Yeah, it is. So you need to be understanding what they're doing. So I do write my stop losses down, and my stock sometimes might trade through my stop loss during the day and close back above it by the end of the day. And you don't want it triggered in the middle of the day if you don't really want to exit the stock. And that happens quite regularly as well. Let's move on. Now we have a question from Daryl who says, "Hi Dale, great show. Thanks for the content. Can you please view WOA as a medium to long-term hold? Thanks." So let's go and have a look at WOA, and I'll be bringing up on here. A long-term hold, I don't really, medium to long-term buy and hold, I don't think this stock will be there from a long to really look at that. I mean, we've only had 3 years of history, so to look at this as a long-term hold or medium to long-term buy and hold is not appropriate right now because it just hasn't given us enough history to see how it trades, because this could be more cyclical, which wouldn't definitely be a long-term or medium to long-term buy and hold. It would just be a stock that you would just hold whilst it moves up and get out of it while it moves down. And right now, it's really interesting in terms of whether you would buy it or not. But looking at March 2020, look at that. It just took off like a rocket, up nearly 2,000%. But since then, it's fallen really heavy. Currently, it's down about 55% there. It has risen up the last couple of months, if you can see there on the right-hand side as well. So since this low back here in March this year, it's changed its momentum. It has risen a little bit, but look, I don't like the stock. I really don't think I like the stock. Yeah, it's going to struggle through this sort of dollar area. I think it is really going to struggle through this 90-cent dollar area. It's a really strong level for this stock, and I'll put my little crosshair on here so you can see. That sort of area there is a really, really strong resistance level on this stock. And I think just from what I'm seeing, it's going to struggle. If it trades down this week here, it's got a strong possibility it will break that low. There's a couple of things I do like about it. This low is 69 cents. That low there is 69 cents, so that's good. It wasn't lower. If this was like 66 or 65, I would suggest it's worse. So that bit I like, and I like that this high here at $1.05 is higher than that one at 96 cents. But straight away, as soon as it broke through, it reversed, which is suggesting it's a strong resistance level. And you can see here, that's the highest close there that we've seen right back since through over here. Back in December, and this is the highest close there, and that was closed at 95 cents. At this point in time, if we see a red bar through here, that's probably what's going to go through that, and it'll possibly even go right down to 60 cents there, or maybe even a bit lower. But right now, I don't like it, the stock. It's not giving me enough to say that, hey, this is a stock that I should have my money in. But please take careful. If you do own the stock, make sure you've got a stop loss on it. And that's all I keep saying is, and then it keeps going up. Whilst your stocks are going up, stay with them. Well, if they're going down, get out of them. Same with the market, like I talk about. Whilst I think the market is going to fall over and go down that 8 to 12%, like I said earlier in my report, doesn't mean it will. It's just because my analysis is suggesting what normally happens is it should retrace a little bit and then move up again, because I've always said that I thought this year our market would be bullish, but we do need to move up and then come back down again, put our foot down on the step to move up again. We're not really doing that, or we haven't been doing that most of this year, so it's going to happen sometime. It will come back, and I'm alerting people that it might happen. And when that happens, when it starts to drift down, that's when you might get some of your shares telling you to exit them. Right now, whilst it's moving up, stay with it. If a stock you own is moving up, stay with it. Just make sure you protect your exit place anyway. But thank you to everyone who sent in a question for this week. And as always, we can't get into them all, and so we always give preference to those who are subscribers. So if you haven't had your question answered and you're not a subscriber, that's probably a good reason why it hasn't been answered. I also give preference to those who put a little effort into their question as well. So if you just type, can you look at XYZ stock, then you're probably going to be, you're going to be at the bottom of the list. But, to me, you really do need to put your question, or to put your question on the top of the list. Tell me, do you own the stock? Are you looking to buy it? Why are you interested in it? And any analysis that you've done on that stock, because what we're about here is about learning, and just by you saying, can you go and look at XYZ stock, is not about you learning. And it really is. You can go and subscribe to reports for that sort of stuff if you like. I really want to help people understand the stocks, and by doing that, I need to challenge you to think about why you're looking at stocks, why you're buying, why you're selling, and your analysis around it. And if you're telling me that, then I can help you to fine-tune that and make that better. And really, that's our job here. We do mentor traders all the time and help them to become better investors and better traders. So if you have a question that you would like me to answer, click the subscribe button and type your question below. That's pretty simple. Hit the subscribe button, type your question. Dale will answer your question in the next week. Now remember that here on this channel we do these Monday market reports every single week. We also do a live stream every Tuesday night, 7 to 8 p.m. Again, hit the subscribe button now and click the bell on the right of it so you know when we upload our videos. I'm Dale Gillham, the Chief Analyst here at Wealth Within. Goodbye, good luck and good trading.